Hello everybody. Today we're looking at the S&P 500 futures, which is the largest capitalized public companies in the US. We're going to be talking about why I believe this is not a V-shaped recovery, rather a bear market bounce. I'm using the Elliot Wave Theory. The theory identifies price movement because of investors' sentiment and psychology. Essentially, the theory has impulse waves that sets up a pattern, and then corrective waves post the larger trend. And there are 5 waves. So we have an impulse wave down, corrective wave, impulse wave down for number 3 wave, corrective wave 4, and then eventually we'll get to 5. Now I do have this line right here because the theory does say that if a corrective wave crosses or superimposes the first wave or any wave, then the whole count is debunked. So let's look at what happens when we change from a candle chart to a line chart. And the reason why we're going to do that is because you can see right now wave 4, or the peak of wave 4, it has superimposed wave 1, which it should change the count. But let's look at the line chart once again. Alright, so we changed it to the line chart, and like you can see, the peak of wave 4 has not yet superimposed wave 1, which means that the pattern is intact. All we have done is a corrective wave with a wave A, B, C, which is essentially perfect. We've broken down from this ascending wedge recently. We came back and retest not just once but twice now the 50-day moving average. There's another thing that I would like to mention, is that the death cross is the cross between the 50-day moving average crossing below the 200-day moving average. Other things that I'm looking at is the decrease or the contraction of volume, even though we're moving higher in price. And also you can see that the MACD is starting to roll over, and we're looking at the Elliott oscillator, which also is starting to roll over. Now let's look at what the possible targets are. This is right here, it's called a Fibonacci extension. So what are the possible targets? I do believe that we will break the lows from back in March the 23rd, and that will put us somewhere between the 2100 to the 1900 area. There is a small possibility that we may stop at a 2280 area, which is a 50% retracement, only because the Federal Reserve and as well as the administration, the government, has pumped so much money into the markets that it may make investors start buying way sooner. In the next video I will be talking about the NASDAQ, which is another indice of the stock market in the US. Thank you very much.